Hey everybody, welcome to the Friday edition of FreightWaves Now. A lot of big news coming out of the White House. President Trump talking about imposing tariffs on Mexico, what that means in terms of freight and a lot of other things. But first, let's get to Nick Austin with the weather, talking severe storms yet again.
That's right, Emily. Luckily, not really a tornado outbreak, but a few areas of the country could see severe thunderstorms today and or tonight. That means some areas of flash flooding, damaging winds, large hail, some trouble for truckers out there. One area, West Texas into New Mexico. Another area much further north as we head up across parts of Wisconsin to near Grand Rapids, Michigan market, and also across the eastern half of North Carolina up to around Norfolk and towards Roanoke and Virginia Beach, Virginia. Those are the trouble areas to watch out for today and tonight. Now we go to Emily and Kevin Hill to talk about Laredo, Texas market.
Yeah, definitely. Thanks, Nick, for that. Not only could a storm be brewing in the central United States, we could talk about a storm brewing in terms of freight in our economy. We're talking tariffs. You are here, Kevin, to talk about, in terms of Laredo, Texas, the Laredo market. Do we kind of think that all of a sudden shipment is going to come in before these tariffs are in place?
Yes, we do. I've been talking to my sources down in Laredo, and they say expect a pull forward. June 10th is the first deadline for 5%, and then October for 25%. So whatever can come in needs to come in, right? Just like we saw in the fourth quarter of 2018.
So this could be big. What are we looking at right now? What is this showing us?
Yeah, this is showing us the national outbound tender volume and how this compares to the green line, which is Laredo, right? You can see it was a little bit down. It should be heating up anyway for seasonality. The two biggest imports are cars and auto parts. So a lot of manufacturing up in the Midwest comes down to Monterey and goes back up. And about the time of the Chinese tariffs, right, around May 10th, you see the market heating up, right? And year to date, as of March, actually, Mexico was the #1 importer in the U.S. above China. So you see that, and then if you look at rejection rates, which we have another chart right here, you can see the same thing. It's the same story. It's kind of just following national average until we get to May 10th, and it pops up about 170, 180 basis points above the national average. And if we look at it specifically in terms of LA, right here in LA, right? So right here you have the event of tariffs, and you see the big sharp drop off in LA, and you see Laredo heating up. You know, things are coming in. We're going to see it heat up a little bit more with some pull forward because of tariffs. And actually already there's been about a 4.8% increase in imports this year and a 2.5% decrease in exports. So there's a mismatch of loads and trucks in the market. And it should be a really good market for carriers and brokers and everyone in that freight market. So.
My question is, real quickly, if say in October, 25%, that is a large number. Then would this almost look inverted? Would Laredo not be getting as much in as we're seeing, you know, a spike right now?
After October?
Yes.
Yeah, after October, you see a downturn, really, if you're going to have pull forward coming in, kind of like what we saw in Q4 on the West Coast, right? Everyone's going to rush, and you're going to have this depressed period or deflationary period afterwards until you hit the normal course again. So
definitely something we'll continue to watch.
It'll be very, very interesting to see going forward, definitely.
Well, John Kingston is joining me now, and a lot of stuff obviously going across the border from the U.S. to Mexico, Mexico to the U.S. You have a chart up here. What are we displaying in this chart?
We're going to show a couple of charts here. This is the amount of all sorts of petroleum, mostly crude, but some products that are brought in to the U.S. from Mexico. Right now it's running at about 720,000 barrels a day. Figure the average price of that is probably about $50, $50 to $55. Throw 5% on that, you're talking about the economic numbers, you know, the cash hit. But it's more complex than that, because U.S. refiners, a lot of U.S. refiners in the Gulf of Mexico are set up to take the type of crude that Mexico exports. They're going to that crude, it's going to be available, but is now going to be uncompetitive to other crude, so they're going to have to make adjustments in the supply chain. That's never good for prices. That's always causes a disruption. So let's look at the next graph. Okay, this is the U.S. exports a huge amount of petroleum products to Mexico. Mexico's refining system is an absolute disaster, and so in order to supply their population with products, they need to bring it in from the U.S. So you can see this is like 1.25 million barrels a day of products that are going from the U.S. down to Mexico. That's a big hit. Are they going to be the subject of some sort of retaliatory tariff coming out of Mexico? I think the odds of that are pretty good, except maybe Mr. Almo, the president of Mexico, doesn't want to add those costs on. And let's look at the third graph. Okay, so this is net exports of, oh, I forgot to put the numbers on, but these are net exports. So the fact is the U.S. does send more oil in various forms to Mexico than it brings in from Mexico. So this is a complicated supply chain. It's now subject to maybe 5% tariffs coming in. It's subject to possibly retaliatory tariffs going out. And as I said, you know, it's always hard to pick what's going to be the impact on price. It's easy to just say, well, 5%. It's never that easy. This is a complicated supply chain. You've got refineries that are dependent upon a type of crude. It's going to be uncompetitive now, and this is just going to add a lot of uncertainty to a market that, you know, quite frankly, has been declining for some time. But this is possibly another disruptive factor that would push prices higher.
Yeah, we're talking about it now, and it's not even June 10th yet, so we'll continue to watch that. And we're talking 5% now, but then the president even tweeted
That's
up
right.
to 25%.
Up to 25%.
So
right.
definitely.
And let me throw out something else. You know that the president has been very obsessed with low oil prices. It would not surprise me to see him come out and say, well, we're going to exempt petroleum, so that the 720,000 barrels a day now that's coming in would maybe not be subject to the tariff. That's always a possibility.
Yeah, great point. As always, John Kingston, so insightful about our oil market, something we'll continue to watch, and huge story, as you heard about how it might affect the Laredo market, how it could affect our oil, how it could affect freight and the whole. We'll continue to follow that on FreightWaves.com. And as always, share the love on social media. Follow us on Twitter, Instagram, our YouTube channel, of course, you're watching right now, and even Facebook. And if Chad was here, I know he would say, don't worry, be happy.